Hey everyone. Hey everyone. I just wanted to quickly make this video to prove to you that we can no longer trust anything that we see with our eyes. We can't trust images that we see on social media. We can't trust videos. We can't trust our friends. We can't trust the news. We can't trust anything or anyone. So be careful out there.
What you can trust, though, is this stock breaking. Look at this parabolic run up. This is a weekly chart from gold. That is crazy. Look at that. Just make it slower if you want to make it even worse. That is unbelievable. What is going on? This is when I woke up and I saw this, I was like, I can't wait to see X go crazy. And I was like scrolling. I was like, I couldn't see anything. Like there was no gold hits 5K. It was just like, nah, 5K. It's bizarre. I mean, that is signaling a crazy future. So there's something going on. I mean, it's above my pay grade. What the hell? Why that? I mean, if there's one signal that I take from it is that if this is a retail pump, which I don't know if it is. I don't know if it's a retail pump, but if it is a retail pump, the good thing is that it would signal the top. So if it is a retail pump, then it's the top. If it's not a retail pump, it's got a lot more legs to run. Because retail will come in at the worst time, right? They'll come in. This is what'll happen. They'll come in now. Let's just say it's the top. They come in at the top. The smart money, dumps or rotates probably into Bitcoin, and then the retail chases Bitcoin all the way, or chases gold all the way down back to, I guess I could see it coming back to 4,500 or so. 45. For sure, the 20 moving average, come and retest it. But this would probably go up like as parabolic as this, right? So you could see it coming back maybe down to 4,500. It's the end of the world as we know it. I feel fine. What is this? Trading View. This is how stupid this is. Do you see this? Watch. Allow. Maybe block. I don't know. Block. No. So okay. Allow. I'll allow. Well, maybe I'll hit this X. You can't really see it, but there's an X here. X. Oh, that did it. Okay. I tried the X. Just FYI. Let's extend this out. Now, last week we did get above the 20 moving average, just barely, even the 200, right? So now we have, this is the 4-hour chart. So remember, it means nothing. 4-hour chart. We have the 50 moving average crossing bearish over the 200. But at the same time, someone could say, the 200 is crossing bullish over the 50. It's all bullshit. It's just a 4-hour chart, right? Now we still have this 83.7 in play. I'm going to put some beepers on here. Do I still have that? Yeah, I do. Just, 83.7. Let's hope not. Well, actually, no, I hope so. Because instead of this stupid range, just coming here in this range, who cares? Like, this is so boring, this range, that just do something like go crash. Do a horrible crash even. That would be better than just sitting here doing nothing. And even at 83.7, it would just kind of be, you know how this would work. 83 point, let's see what 83.7 is on the daily. 83.7. So we would be underneath this channel of eternal monotony that started way back. But you see, you got this wick here. That's why I have this 80K-ish. You could see how we break. So go down and retest the channel of eternal monotony's support, 85.2. break that, candlestick this wick. Can't see it. Candlestick this wick right there at 80K-ish. And then at 80K-ish, the one thing you got to remember about 80K-ish is that as low as it is, it's not really that low. Bitcoin can always go farther. In fact, it always does, except for the top side. It'll always disappoint on the upside, but on the downside, never underestimate the power of the downside in Bitcoin. So 80K, even as horrible as that may sound, am I stuck on 87.9? Let me see here 1 second. Let me refresh this. What is the actual? No. Oh yeah, it was lower. It was lower. Surprise, lower. 80K-ish. So let's just go deeper into this. That would put us at this channel of descensions, resistance now acting as support, right? So that would make sense. There's a little bit of confluence. E-money, we lose 80. We're going to 60-ish. Yeah, it wouldn't surprise me. But you lose 60, you're going to 40-ish. We did this in 2021, remember? 40K was, I saw a lot of people saying at 40K, that's going to be the bear market. So let's take a look at what 40K was as far as the drop. You wouldn't think I'd have to close this up so much. It's not like we had that big of a gain in the bull run. Let's see here. Where's 40K from here? Okay, so from the top down to 40K. That was a 40% dip. 40% dip. Now let's see where 40% is, because that was at that point everybody was screaming, this is it. It's over. They finally we got out of the denial. It's finally okay. Now we should all sell. And everyone, well, maybe not. And then they were down. And then it was, it's going to round 30-ish. Once it hits 30, it's going to bottom, right? And then it went to 20. It's like, well, once we break 20, that's the bottom, right? And then once it got to 15, it was like, well, 10K. The problem is that there's always a pattern that you can find that will take you to a number, right? When the bottom comes in, who really knows? It could have been 10K. There was a ton. There was a head and shoulders pattern back then. There was a bear flag that would take us to 10K. All of it, right? The one thing I hope people took away from this, well, let's finish this 40K, 40%. 40% would take us to 74. So remember, at 40% downside in 2021, we still had another 50% to go. Well, over 50, went to 15.5. But I don't, if we go down the rule of Max Payne, I would say not only do we have a diminished top to the upside, but we have an increased downside. That would be Max Payne, if you really think about it, right? You don't see a top, arguably, but you still see the bottom. That would be Max Payne. But we've already called it here, 56K-ish. No, 29K. Oh, yeah, I always get confused here. Where do I get? That's 56K-ish. Oh, yeah, I know what 56K-ish. 56K-ish is this head and shoulders, right? This is where this plays out to 56K-ish. Now, you could see with the market circumstances now, this could play out to 56K just because there's no buyers, right? So absent of buyers, this will just play out to 56K, tire out what's like the 0.001% of retail that still gives a shit about Bitcoin, tire them out. By the time listen, it's a ghost town now, but you can imagine at 56K, it's just, dead on arrival, which is essentially where we got to get to. Where that pain is, where dead on arrival is. I'd say it's dead on arrival now, but that's just because I'm involved in the the streaming aspect of it. I see it in engagement, right? But one thing I've learned from this bull run is that as low as engagement can get, and engagement, interest, same thing, it can always get lower, right? Just when you think you've hit a new low, it can always get lower. So keep that in mind when we get to price action. So 56K, I should probably put this where 29K is. Where is 29K? Yeah, there we go. Oh yeah, and look at that. There is this little memoric channel of dissension. Could find it. But that would be crazy if it actually hit 29K-ish. Now, to be perfectly honest with you, I would like 29K. At 29K, you could probably get some life-changing sats at 29K that you probably never dreamed you'd ever have the access to, right? And at 29K, imagine this. No one will be telling you to buy at 29K. I will, but no one, everyone else in the world will be like saying you're crazy, right? That's another pretty good signal. When I have conversations where I tell them about DCA into the crisis, people aren't calling me crazy yet. You'll know we're getting towards a bottom when any mention of buying Bitcoin will say you're crazy, right? That's not happening yet. People are still like, oh yeah, because they're just apathetic, right? But when they start dogpiling on how crazy anyone would be to buy Bitcoin, that's the time to buy. That's why it'd be pretty exciting down at 29K. If you factor in the seasonality of it, what do you think's more likely, lower or an all-time high? Right? If we were to hit another all-time high here, it would break the cycle in two, right? So we would have to do something novel, which arguably we kind of have. We hit all-time high, broke the previous all-time high before the halving. What else did we do that was novel for this? That was the first novel cycle breakdown, so to speak. And I guess maybe the second one was, well, no, you can't. All-time high was hit, right? All-time high was hit, 126. Whether you want to call it an all-time high or just an all-time meh, it was hit. So that wasn't really broken. U.S. Bitcoin ETFs bleed 1.72 billion in 5-day outflow streak. But I thought Saylor bought didn't he buy $3 billion worth of? Shouldn't have the price went up? 1.72. U.S.-based spot Bitcoin exchange traded funds. At least this. What I'm happy about. Why is this like this? Why can't I get this? Can I go smaller? Meh. Who cares? Can't read it. You're probably not reading it anyway. Spot Bitcoin ETFs posted 103 million in net outflows on Friday, continued outflow streak that began the previous Friday over the 5 days, including the 4-day trading week in the U.S. shortened by Martin Luther King Jr. on Monday. Total outflows reached approximately 1.72 billion. At least they're not saying. Well, when people start saying BitRock or BlackRock is selling, it's such a red herring. Because yes, it's true, but they're not selling. Whenever you see someone say BlackRock is selling, they're not selling. Their clients are making calls to BlackRock to sell their exposure, right? So you're being lied to as soon as you hear that. I know it's easier to be tucked in, BlackRock selling. It kind of makes more sense. But unfortunately, the real sense of it is that it's not BlackRock selling. It's retail telling BlackRock to sell their exposure. It's all boomers, right? These boomers. Market participants often watch spot Bitcoin ETF flows to gauge retail investor sentiment and look for clues on where the trend might head for Bitcoin in the coming weeks. That's a funny statement too, because retail doesn't know anything, right? All they know is price go up, price go down, right? And when the price go up, that's when they get excited and they buy at the top. Price go down, that's when they get really scared, depressed, and sell, right? So retail sentiment, it's almost, it'll be interesting we're like at 0% retail interest, right? So having that out is an interesting factor now, because in 2021 or 2022, we had strong engagement and excitement even at 15.5, right? So there you could use the data points for retail sentiment engagement, but when it's at 0, that's off the table, right? So now we're kind of judging the market differently. You can't really judge it with retail, because this is what retail does. Retail sees this and jumps on board, right? This is the gold chart. Retail sees gold going up and jumps on board, right? And then when they will get up here, and then when it comes down, it'll probably come down to 3,500. All said and done, I could see it come back, like dump to 33. People will think the run's over, but it would just probably consolidate here, maybe for 10 years, But it depends. Maybe we're in a new market then, and gold behaves differently, right? Maybe its behavior is more novel than anything else. It all depends. So, like, unfortunately, I think between now and Wednesday, because Wednesday is the FOMC meeting, right? I'm kind of thinking no, as long as Jerome Powell, as long as Jerome Powell is there, he'll just stick to his guns. What does he have to lose now? Maybe his job, but what does he care? It's kind of like you're working your last shift at your job. You probably even shouldn't be doing it. Most people don't let you, like when you remember giving 2 weeks. Yeah, I just like to give my 2 weeks notice here. I'll be quitting in 2 weeks. Oh, okay. Wow. And then you still worked 2 weeks. I don't know if they do that anymore. Maybe they do. But who would want, as an employer, someone working when they've quit? So, I mean, you could assume what their work ethic would be in the past 2 weeks. Now, this is going back into like legacy jobs where people actually worked for 2 weeks or worked all day. I know people still do. Let's take one look at the weekly. What's going on here? Yeah, we're back into our bear flag. Yeah, back into the bear flag. This is probably like what the worst candle we could probably see last week. I remember when we had hit this is the crazy part. Is this thesis of mine, this bull market rejection zone, it played out to a T so far, right? We threw a wick up, couldn't get past, and then got hella rejected down. And the following, like insult to injury, this following weekly candle was not only a bearish engulfing candle, it was a flag bearish engulfing candle. Like it basically closed this entire price action. So this chop was a bearish engulfing flag. 1, 2, 3, 4, 5. That's a 2-month bearish engulfing flag, which is crazy. Not a good bullish sign, but again, I mean, I think with retail gone, we can expect things to just turn around on a dime as soon as they get the signal. Okay, release the hounds. It'll switch. But I still think it'll probably be when there's still a couple of crumbs of retail there, right? It's just being swept up. Like once it's crystal clear, you can eat off the linoleum floor before you break dance on it. That's when you would probably see it turn around. So we got probably what we didn't want to see. At the end of the day, it doesn't really matter. When I see, I don't know about you, but when I'm on X and I see Kathy Woods, Tom Lee, the other Asian guy, the guy who talks like this, he just talks like this, whatever, Samson Mao? No, is that Tom Lee? I don't know. I get the two. They kind of look alike in a weird way, to me, in a weird way. When I see them, I no longer watch it, because if there's one thing I took away from this bull run is how none of those experts know anything. And so we've shifted from alternative media salesmen from 2021, like they're YouTubers, people that probably you follow to this day, right? Those people were the first layer of salesmen. And then we've moved into institutional salesmen, like the CEO of a hedge funds, or Tom Lee, the CEO of some Ethereum hedge fund, right? Those people are now the new salesmen. And so if you want to see where the price is going, listen to them and do the opposite, right? Like when I see Tom Lee still saying Bitcoin's going to 250 by, it's just, it makes sense because it's an easy clickbait. How many impressions is he going to get on that X video when it says Tom Lee and people repost it like it's like it's get ready. Kathy Woods just said this, right? It means nothing. It absolutely means nothing. Now, last night when I was just sitting there watching some YouTube videos, what came upon my For You page was like gangster clips from movies, right? My algorithm knows when I'm bored. It's like, okay, we're losing them. Throw some clips of gangster movies. And The Godfather came on. And then, of course, what you do when you get to my age is you start grokking the age of actors when they did this, right? I don't know if you do. I do. And so I'm like, how old was Marlon Brando when he shot The Godfather? Send. Essentially, he was 3 or 4 years younger than I am now when he shot this movie. He was in his late 40s, I think 46 or 47 or something like that. So like if I was auditioning for The Godfather, they'd be like, thanks for coming. We're kind of looking for someone a little younger, a little younger than you. Then, of course, the next clip went to Casino. Okay. How old was Bobby De Niro when he shot Casino? And essentially, so when Robert De Niro shot this, he was 52. So he was slightly older than me. We're essentially, we would have been in high school together. He would have been in junior high when I was in high school, and he would have been a year older than me, or 2 maybe, when I was in high school. And then finally after that, because I knew I was getting really bored, almost as bored as the Bitcoin markets, they said, I remember what, this guy also likes Three's Company. Let's throw him some facts about Three's Company. And of course, it's like, oh no. How old was Norman Fell when he auditioned when he got Three's Company? Send. Same age. So what you're seeing here, this is Robert De Niro at 52. This is Norman Fell at 52. And this is Marlon Brando at 47. So we are in the same stages of life. We would all have been in high school together. Me, Norman Fell, when he auditioned for Three's Company, and Bobby De Niro when he was shooting Casino. And of course, Marlon Brando would have been some schmuck face in grade 8, right? Grade 8. Right? So that's what happens when the Bitcoin market is as boring as it is, and you got to watch Peter Schiff's boner cuck all the Bitcoiners as we rage over 5K, which is good. Don't get me wrong. This is a good signal. We want the liquidity to move into hard assets because it is just a matter of time before it rotates into Bitcoin.
Make sure you like and subscribe.